Today I want to update you on how we see the environment for investing in global equities. In short, the environment has become less favourable as the prospects for a positive resolution to the US-China trade dispute have diminished. There have been a number of new developments over recent weeks which we believe significantly alter the probabilities of the possible outcomes for how this trade dispute could be resolved. On May 3rd, it has been reported that Beijing sent a diplomatic cable to Washington with wide-sweeping edits to the 150-page draft trade agreement that the two nations had been working on for months. Furious with this new development, President Trump then indicated that by the end of the following week, tariffs on $200 billion of Chinese imports would be increased from 10% to 25%. Then, on May 15th, President Trump signed an executive order to allow the Commerce Secretary to block US companies from transacting with certain foreign telecommunications providers, such as Huawei. It is no secret that the Trump administration and the US intelligence community are concerned that Huawei is interested in both technology transfer and possible intelligence collection in foreign telecommunications networks. Meanwhile, the company's CFO, who is also the daughter of the founder of Huawei, remains in detention in Canada at the request of the United States Department of Justice, who believe that she and the company have engaged in financial fraud. Over in China, we have seen increasing press in recent days that argue that the demands being placed on them by the United States infringe on their sovereignty and their economic development. Again, this appears to be in direct contrast to what we understand had previously been agreed to by Chinese negotiators over recent months. Given this new information, it is difficult to see either side backing down in the near term, and if anything, the situation could well escalate from here. To us, this means that the probability of more negative outcomes from this dispute has increased and the probability of more favourable outcomes has reduced. At the same time, global stock prices, which are still up double digits year to date, do not appear to be reflecting this deterioration in prospects. As such, we have significantly reduced our global portfolio exposures. This is the opposite of the scenario we found ourselves in last December, when the prospects for a trade agreement were improving at a time when stock prices had just declined, which to us meant at the time that it was illogical to increase portfolio exposure. No one knows how this dispute will play out, but the outcomes are globally significant and will impact all investors. We believe now is a sensible time to invest conservatively and prepare for future opportunities which are building.